Should I pay off my rental property? Wondering if I should pay off my duplex or let it keep riding. Here are the pertinent details I think matter. Purchased 35 months ago on a 15-year fixed at 3.125 with 25 down. I read that and want to stop right there. However, my wife and I were discussing and she says why not pay it off. I'm paying roughly $150 per month in interest according to my last statement. Payoff is about $57K. I have the funds available. Outside of emergency fund, I don't see, nor have any other plans to buy another property within the next year. Zillow states the value is about $160,000. I own one other SFH rental. Both sides are rented. Rent income is $1,650 for both sides. PITI payment is $775. Expenses are water bill and sewer bill about $70 per month. Property is in an AE flood zone and requires insurance which costs $760 per year. This is included in PITI, along with taxes and regular insurance. So my dilemma is I am currently making 5.25 on a high-yield savings account that my cash sits in. From a math standpoint, I think it's better to leave the money there. It's about a 2 spread from the loan interest, so in 1 year, about $1,140 to the good. Of course, I have to pay tax on my interest. I could also cancel the flood insurance and save $760. There is no water near my property and I thought they were crazy when the bank said it was in a flood zone. And I needed insurance. My wife says if we pay it off, we could put the monthly cash back in the bank and have the $57K repaid in about 45 months, say. About $1,285 per month after water, sewer, tax, insurance. So am I missing something? Is there a better way to think about this? Last thing to consider is I don't need the cash flow as income either way. Currently I just keep putting in the bank. I have ample reserves as well for capital expenditures. Thanks for reading. I appreciate your opinions. No. Are you nuts? You will never get such low loans. Financially, obviously no. Emotionally might be nice security feeling. Which do you value more, finances or emotional benefits? Having peace of mind is nice, but having more money might be better. Just depends on your persona. No, don't pay it off. That's free money right there. Take your $57K and park it in a HYSA earning at least 1.5 more than the payoff. Leave it in the HYSA. It is free money. And you forgot to mention, if you pay off the mortgage you can no longer deduct that interest from your rental income. You are making a little bit of money by keeping the money in a HYSA. I don't see a reason to pay it off at the moment. In my opinion, don't pay it off. Invest elsewhere, like stock market index funds, or T-bill ladder, or into a real estate syndication, or just keep it in your HYSA. You have liquidity, in case you do find another property to purchase, medical expense, or just want to take a dream vacation. Cash is king. Don't pay it off, especially since you're rolling on that low an interest rate. As others have said, if you want to do anything with that money, put it in some index funds or T-bills. You're paying $150 mo in interest at 3.125. Put the money in the bank and earn over 4. It's printing free money. Don't pay it off. Most people will disagree with me from a mathematical point, but I would pay it off. It's just 2% spread. That's what I did with my rentals. Keep in market gain 2%. Pay off debt, no more stress. Sense of pride. Cash flow positive for life, priceless. Math, no. Wife happiness, yes. Had you thought of putting extra dollar towards the principal to pay it down faster? Maybe split the profits at the end of the year. Put 1/2 in savings and the rest towards principal? After a while, and the exact phrase escapes me, but you can have the mortgage servicer essentially re-amortize your loan, which should lower the monthly pie even more. Better to keep it mortgaged so you do not show a profit. Assuming you and your wife are working and have an income. I have some small industrial units rented out for 23 years now. I have raised my mortgage when it renewed and took out my investment money, what I originally put down on them, and put it into TSFA and invested it that way. The profits from the investment are tax free. Any money profits you make from the rentals are considered earnings that you have to pay taxes at the end of the year. Absolutely not. Keep that forever as steady income. You're paying a 2020 loan with $2023 and will continue to pay with less valuable dollars as time goes on, while your loan stays the same and your property appreciates. Unless you fall into some serious financial trouble. Never, ever, sell. A wild guess, but you aren't paying for any interest. You are not paying $150 a month. Your tenants are. So it's not your money. Why worry? Think like an investor. Keep your cash. Invest somewhere else. Those $57K will get you 2 properties down payments in some Class C areas in some states that will immediately cash flow even with current interest rates. You can start making $500 a month and build equity. Money going right into your pockets. Do not pay your loan off. It's not your money. Why worry? I would not pay off. 1. Always use other people's money first if possible. The bank's money in this case. 2. It will be years or a decade or so before you can touch that rate again. 3. Look at your amortization schedule. Each month your interest rate will drop and your principal will increase. 4. The tax deduction on interest is valuable. 5. Invest the $57,000 in a high-interest savings account at 5 and you make $237.00 month, which is a $87.00 gain from your $150.00 month interest expense. Great for you and your family to have that interest rate. If you pay this off, people in the mortgage company will laugh at you. I feel like some of these posts are just to flex the rate. You are cash flowing. You got approved to use the bank's money. Use it. Let your money work for you. And let the rental pay itself off. I'm assuming you are accounting for vacancy and capex repairs. With the rate you have, I'd hold the loan as long as possible. You can't buy groceries with a paid-off house. Only thing it saves you in this case is a small amount of interest that you can easily surpass with a HYSA that's low risk. Keep your equity leveraged. It's psychologically challenging, but the right mathematical answer is to not pay down the loan. There are advantages of having the cash flow. You can make more interest on your cash than it's costing you. And the interest you are paying is tax deductible. You need some type of flood insurance. If a freak flood happens and part of your house damages a neighbor's, your regular insurance won't cover it. Could get boned. Having a mortgage comes with a little bit of protection from suit-happy tenants. Make sure you're covered in some other way. I pay off my properties too, but I don't have a lot. Gives me peace of mind. And I have tons of cash coming in with few expenses. Plus, if the bottom falls out of the market, I'm fine. Keep in mind the rental interest is a 100 tax deduction, so the offset to your income that is creating is needing considered. Buy Bitcoin and Ethereum.